Hello, welcome back to class. Today we'll be talking on costing method and techniques, costing methods and techniques. And in doing that, we'll quickly look at job costing, we'll look at batch costing, process costing, contract costing, service costing, and comparison of job costing and process costing. In the earlier module, we've been able to learn what costs are and how they behave. And this module explains how costs are assigned to product or services. And the methods depend on the nature of production. That is, or for example, a custom yard versus a bottled soda. Different methods exist for customized batch continuous contract and service operation, and accurate costing will actually help in pricing, profit measurement, and inventory valuation. Let's look into the costing methods one after the other. The first is job costing, which is known for custom one-off products. The batch costing is known for identical products made in batches. The process costing is for continuous homogeneous production. Contract costing is for large long-term projects, and the service or operating costing is for intangible services. And each of these methods suits both specific purposes or production environment and decision needs. Looking at job costing more, it is used when work is done to specific customer requirements. When there is a specific customer requirement now, the job costing actually is put to work where it's actually for specific customer requirements. And each job is treated as a separate cost unit with its own job cost sheet. And costs, including material, labor, and overhead, are recorded individually for each job. And it's ideal for customized, short duration, and non-repetitive production. An example of this is printing presses, shipbuilding, custom furniture, and the likes of repair workshop. And we have job cost sheets, the job cost sheet. And what are the components of the job cost sheet? The first is the header information, which talks about the job number, the customer, and job description. We also have the direct material, which talks about from requisition notes, which is from requisition notes. And we also have the direct labor, which is from time, ticket, or wages sheets. And there is also the applied overhead, and this is based on labor or machine hour rate. And there is also a summary which deals with total job cost, units cost, and the profit margin. Looking at the flow of the work, you can see it's move from inquiry to cost estimates to job order, then to record costs, and then you apply overhead, and then get the total costs and transfer to finished goods. This is the workflow of the job costing job cost sheet. We move to the batch costing, and this is a form of job costing where identical items are produced in batches, and the batch is treated as one cost unit. That is, cost per unit is equal to total batch cost divided by number of units, and it actually promotes economies of scale and control over setup and storage costs. And it's common in the likes of pharmaceutical companies, industry, textile, electronics, bakeries, and auto parts. And key concepts include the economic batch quantity, the EBQ, which determines the most cost-efficient batch size by balancing setup and holding costs. The process costing is used for continuous standardized mass production in terms of oil, chemicals, food, and the costs are accumulated by process or departments and not by individual, just like you say about job costing. And it's actually the total process cost averaged over all units to obtain cost per unit. And it involves key concepts like the normal loss, which is an unavoidable waste absorbed by good units. And we also have the abnormal loss or gain, which is excess loss or saving treated separately. And we also have the work in progress, which is partially completed unit valued using the equivalent unit of production EUP. The contract costing is actually used for large, long-time and site-based projects like the likes of road, bridges, or buildings, and each of these contracts is treated as a separate cost unit. And the profit is recognized gradually through notional profit, and it is based on stage of completion. And for example, you see 25% work certified, no profit yet, and 25 to 50% or 1/3 it's actually 1/3 of notional profit times cash received divided by work certified. And for 50%, it's actually a 2/3 of notional profits multiplied by open bracket cash received divided by work certified. And it actually emphasizes control, accountability, and progressive reporting. For service costing, it is applied to service industries such as transport, healthcare, education, and hospitality. And it's actually focused on determining cost per unit of services using composite cost units. And units like passenger per kilometer, room per day in terms of hotel, for patient per day in terms of hospital. And it's the cost classification under this. We have the fixed charge, which is the likes of salary, rent, insurance, and more. We have the semi-variable in terms of repairs, communication, and the likes. And we have the variable charges in terms of fuel, consumables, direct materials. And it aids in tariff setting, performance measurement, and also cost control. Let's compare job and process costing, which is the last aspect of the module. Looking at it from the aspect of nature, the job costing is actually a customized one and it is non-repetitive, while the process costing is actually a continuous and standardized one. And as per cost unit, job costing is actually for individual jobs, while process costing is actually for process or departments. And then for cost flow, it's actually separate for each job. It is treated separately for each job under job costing, while under process costing, it's actually sequential across process. And as per work in progress, it's actually for individual jobs for job costing, and it's always partial under process costing. And lastly, we have the primary documents for job costing. Its primary document is the job cost sheet, while the second, for process costing, it's actually a process account. In conclusion, no single costing method fits all situations, and the choice depends on production type and management needs. Mastering this method ensure accurate costing, fair pricing, and effective decision making. Thank you for listening.